Let's talk to Jim Bianco, president of Bianco Research, and he joins us from Chicago, Illinois this morning. Jim, good to have you back on the program. What do you think of the market action right now? What are the markets telling you?
Confusion, basically. If you look at the larger trend in the market, we're unchanged on the year. We're about where we were 2 weeks ago. We're about where we were 6 weeks ago. But we seem to do it in spectacular fashion, go nowhere. We seem to do it with 300-point up days, the worst Thanksgiving since 1932. And so the market is just unsure as to what's going to happen next.
Yeah, unsure of what's going to happen next. So what about from the European side? You still have a lot of resistance coming from the German Chancellor, Angela Merkel. Does it seem that we're going to get some sort of resolution, because these next 2 weeks are very critical and people have a lot of expectations as to this leaders meeting in Europe on December the 9th?
Yeah, some people in the marketplace have called the December 9th meeting the summit of all summits. They expect something to come out of that summit that would look like a final resolution to put this problem behind us. If we don't get something on December 9th, there's a risk then that the financial markets in Europe could start to further unravel to the point where they cannot be saved. Number of people are really saying that we're down to days now that they have in Europe to try and fix this problem. And hopefully that's the warning that they've heard too, and we're going to see something fairly soon, because I don't think the markets can wait much longer.
Yeah, and Jim, you're saying if we don't get a fix on this day, the fears of the euro starts to unravel. What does that mean?
At that point, I think you're going to start to see sharply higher interest rates across the board in Southern Europe, and especially in Spain and in Italy. There'll be more talk, not of ECB money printing, which seems to be what the market is focused on right now, but rather, say, the exit of the Greeks from the Eurozone, and maybe even more from there, and it could start to get really ugly then at that point. So we're down to days. The market is trying to send a signal to European leaders that they don't have weeks or months to try and give us a solution. Now, they could put together a solution that the market will buy into that could take weeks or months to implement, but they have to give the market something credible, and they've only got days to do it right now.
Okay, what's something credible? I mean, can you tell me what you want to hear from the European leaders? Because you have Angela Merkel still fighting against the ECB and euro area bonds, but she's saying let's look at fiscal integration, but you have the market seemingly pushing or pressuring Germany to do just that, which is to issue and have the ECB be the lender of last resort.
Yeah, that's the problem, is the market is kind of demanding that they do something, but it's unclear as to what they want. I think what they really want is some kind of a solid fiscal integration plan, that there's a discipline on Europe, especially the southern European countries, as far as how much debt that they could issue. Then, if you've got something like that, we've got a plan in place so that they can't borrow too much money, then maybe they'll push again. The market will push again on the idea of maybe the ECB stepping up with quantitative easing, because then it's a finite program, and it's just to get you to this fiscal integration. Otherwise, it's kind of this open-ended program to try and save markets with no goal in mind. So they need to put a goal out there and then maybe start to use it.
All right. So tell me, how are you playing the markets then into year's end, Jim?
I'm very cautious on the markets right now. They haven't been able to show me anything that suggests that they're going to break out. Even the European markets, off of the announcement of the swap lines to the ECB, especially via the Fed, we really got a very muted move. Remember, back in August, we had a 200 basis point drop in Italian and Spanish yields in a couple of days when the ECB bought. This time we get a 20 basis point move. So it's telling me the market's still unsure. I want to play it cautious. I'd probably be flat to slightly short going into the end of the year.
Okay, Jim, one more question for you. What about the U.S.? You know, we got better than expected manufacturing numbers, really encouraging on that front. We have non-farm payrolls due out later on today. What to you would be either a disappointing number or a better than expected number?
I think anything over about 150, 175,000 on the headline number would be better than expected. Anything less than 100,000 would be a disappointment. Somewhere in the middle there, I think, would be in expectations. But the takeaway was, if we get another expected number of 125,000, it means that the U.S. economy still remains a bit subpar. Maybe not at recessionary levels, but it's definitely not at potential levels. It's at a subpar level. Really needs to get north of 200,000 before we could say we've got a solid recovery going. We haven't had that in quite a while.
Okay, we'll be watching for it. Jim, thanks for your time. Jim Bianco, president of Bianco Research, is joining us from Chicago, Illinois.